Clear the area! Incoming load!
Volume spiking, pre-tariff rush.
Hook up! Move it!
Highest since 1935. Lowest recorded. Batch A305 confirmed. Moving to Sector 4.
Data synced. Demand metrics are peaking.
The 1970s emergency law is being challenged.
It infringes on constitutional rights.
Tsumanおじ今日のニュースを読みます。New York Times U.S. trade deficit widens despite Trump tariffs. The monthly trade deficit and import rebound in November after shrinking significantly in prior months, new data showed. By Anna Swanson, January 29, 2026. The U.S. trade deficit in goods and services rebounded to $56.8 billion in November, rising 95% from the previous month as President Trump's tariffs continue to cause huge fluctuation in trade, according to data from the Commerce Department released on Thursday. Export fell 3.6% in the month to $292.1 billion, led by declining outbound shipment of gold, pharmaceuticals, consumer goods, and crude oil. Import rose 5% in November to $348.9 billion as Americans bought foreign pharmaceuticals as well as equipment to fill new data centers. The combination pushed up the monthly trade deficit, the gap between what the United States import and what it export. The data reflected some of the intense volatility that has resulted from the president's decision to impose steep taxes on imports over the past year. The trade deficit had fallen significantly in prior months, seemingly accomplished a major goal for Mr. Trump, who views that metrics as a sign of economic weakness. The October trade deficit was the lowest monthly figure recorded since June 2009. But much of the drop was the result of temporary fluctuation in trade in certain products, like gold, which investors have thought out as a haven amid tariff-related turmoil. Economists have cautioned against a single-minded focus on the trade deficit, saying that it can move from a wider variety of regions, and that last year was particularly volatile when it comes to trade. In the early months of Mr. Trump's presidency, companies rushed to bring goods into the country before the tariff took effect, causing imports and the trade deficit to spike. After Mr. Trump announced the global tariffs on April, shipment of import fell back. Other types of products like pharmaceuticals and semiconductors have also seen import surge and declines as the president announced, imposed, and changed tariffs throughout the year. The tariffs have also shuffled trade with various countries. From January to November, the goods trade deficit with China was only $189 billion, less than the United States trade deficit with the European Union, and only slightly larger than American trade deficit with Mexico. While importers have changed the timing of their shipment to avoid tariff, When added together, trade still approximated normal levels. Last year, through November, the overall trade deficit was still up 4.1% from the previous year. Exports for the first 11 months of 2025 were 6.3% higher than the previous year, while imports were 5.8% higher. Data for December and the full year will be released next month. The question for economists now is where trade goes from here, and if the president's policy continue to lower imports or the trade deficit in long term. Diane Swong, the chief economist at KPMG, said the increase in trade deficit from October to November was the largest monthly increase in record, apart from the surge last January, when Mr. Trump returned to office. The trends were driven by the trade in gold, as well as pharmaceuticals and a sector that was incredibly volatile in 2025, she said. Eugenio Alleman, the chief economist for Raymond James and the investment bank, said the increase in the monthly deficit was larger than expected and would bring down the projection for U.S. economic growth in the first quarter. Net imports were subtracted from economic growth figures to avoid double counting, so that drop in the trade deficit in prior months had increased estimate for U.S. gross domestic product. Tariff could undergo more changes in the weeks to come. The Supreme Court is set to rule soon in the legality of many of the tariffs that Mr. Trump issued using 1970s emergency law, though the Trump administration has said any levies that are struck down will be quickly replaced using other legal workarounds. The administration has used the emergency law to impose tariffs on nearly all countries and added more levies to products and sectors it deems important to national security, including steel, copper, and upholstered furniture. As of January, the U.S. effective tariff rate had climbed to nearly 17%, the highest level since 1935.以上です。